Many market participants do argue that in the commodities market, many of the brokers are actually jewelers who have the positions, or they're using it as a hedging mechanism by coming on the exchange platform. They're not actually brokers for the sake of brokers as defined by SEBI, and hence by the time of the transition gets over, which is 1 year, you might see a shrinkage in the kind of number of brokers or members who will be actually there on the stock exchange or a commodity exchange platform.
I think SEBI is, we have found they're very conscious of the fact that the transition should be non-disruptive, it should be smooth, and I'm sure they will take care of that. There are net worth and other criteria for intermediaries in the securities market, which even the intermediaries in the commodity derivative market have to comply with. I think these are essential risk management measures, and those things are definitely necessary and important.
What about regulation or regulating the spot exchanges? Do you think the regulations are enough in place to avoid another NACL kind of situation?
You see, there has never been a regulation for spot exchanges, because the trading in agri commodities is done within the state, and there is no central law for that because of legal and constitutional reasons. There were attempts made earlier, some years back, to have a law for spot exchanges, but because of some of these issues, it did not make much progress.
But do you still feel that there should be some regulatory framework for spot exchanges, whether it's part of SEBI or not, but there should be something?
As I said, this issue was examined in much detail in the year 2011 and 12 in the Ministry of Law and Justice. There were many legal and constitutional problems in having a central law for regulating spot exchanges, because there are some commodities that are traded within the state, that is in the state list. Some trading of some commodities is in the concurrent list, and interstate commerce is in the union list. So there are some issues which actually create a problem in having a regulatory framework for spot exchanges.
Do you think SEBI has a capability to take forward the combined commodities and stock market monitoring going forward in terms of scale?
Of course, SEBI has all the resources, and they are already building enough capacity to regulate that commodity derivative market also. And I think we must remember that a number of things are pretty common. For example, registration and regulation of intermediaries, that would be common. Monitoring and surveillance, they have a strong system. They are already adding to that strength for a commodity derivative market. And investor protection, they have a very robust system, so which they will make this market also a part of that. And education and development of awareness, etc. So there are a lot of activities which are already being done over there. Only the monitoring and surveillance part, contracts, there are a few peculiarities of this commodity market which will be factored in their regulation. They are already working on that.
You were working with around 60 employees, and you were very understaffed as a regulator because you were not able to get the right kind of talent in the market. Only 1/3 of those employees would be joining SEBI, and I'm assuming that even SEBI is facing the same challenge. Will regulatory monitoring of the commodity exchange be a tough task, especially in the first few years as SEBI builds up capacity?
I think SEBI already has very long decades of experience of regulating exchanges and markets. So that experience and capacity will come very handy in regulating this market also. They are already, we understand they have appointed some of their staff members and officers for regulating this commodity sector also. They are also taking some people from us, and in due course they will be building further capacity as required. So I don't see that as a problem at all.
We come to the question of warehousing, because that plays a very key important role when it comes to settlement of contracts. Currently it comes under the Warehousing Development Regulation Act, and there's an authority which looks into it, but that authority doesn't have enough teeth, because the registration to that authority is a voluntary registration and not a mandatory. Do you think SEBI should be asked to look at the monitoring of warehousing, or should SEBI bring warehouses as intermediaries for commodity markets?
Under our system, as you know, we have this closed user group arrangement for warehouses in our exchanges, in which the exchange picks up the warehouse service providers of certain net worth and capitalization, and they find warehouses to be used by the exchanges under their terms and conditions. And we have mandated that these warehouses register with WDRA to adhere to certain quality and other physical parameters.
But that is because the FCRA didn't have the powers to monitor.
Yes. So we have this arrangement now, which is working quite well, and there is a lot of transparency and robustness in this entire system. Now when this market is regulated by SEBI from 28th of this month, they will have this additional choice, because their regulations may permit warehouses to be used as intermediaries also. They will have to, after they take over, they will have to examine this whole issue, and they will have to take a view on that. We have never thought about that because we did not have such provisions in our Act.
But what about the development of the warehousing receipt transaction market? Because electronic warehousing was also something which was proposed, but it never took off for there. They were trying to bring in vendors, but it never went ahead. Where do you see is the lacuna in the existing warehousing act, that it's not able to make the warehousing as a robust system?
See, the existing WDRA Act, as you said, it also only provides for voluntary registration of warehouses with the authority. So there is no mandate or compulsion for any warehouse. So definitely that's a limitation of the law. I think unless there is some kind of mandate for all warehouses to register with a central authority like they have in the USA, there needs to be an agency where warehouses have to register, and that agency makes sure that the warehouses maintain the quality and the quantity of the stocks that are kept there, so that the receipts issued by the warehouses have credibility. You see, just by making a warehouse receipt negotiable on paper or technically, that may not be acceptable to market or the banks, though technically they may be negotiable. I think what is needed is a credibility of these warehouse receipts, which will come if there is a strong authority which mandates and ensures that the warehouses function properly.
Where do you see the future challenge lying for SEBI when it comes to the commodity markets? As a regulator, where do you, which are the 4 or 5 areas which you will pinpoint, saying that these are the areas which SEBI should be working on, say, over a period of next 3 to 5 years?
I think the main challenge for these derivative markets is to have a transparent and strong underlying market. See, the problems, if there are too many problems like opaqueness, etc. in the physical market, all these get transferred to the future market or the derivative market also. So if once we have a well-functioning physical markets, after we have a national market as is being done now, we have a strong, robust warehousing system, etc., then many of the problems that now you find in the future market or a derivative market will not be there. So I think the really important thing is to work on that, work with the stakeholders, though it is not a mandate, but for development of the derivative market, you need to work with the physical market in a promotional kind of way. That I think is really important. And then if you come to the derivative market itself, I think important is to have depth, which is true of any market actually. So how do you get depth in the market so that you become a very, your price discovery is credible and some large fellow is not able to move prices in a particular way. For that you need to have more participants, more instruments, so that there is more liquidity and there is more participation. So I think that is the real challenge.
It also means that getting in more investor classes into it, like FIIs, into commodity markets?
See, the problem is that if you try, we have recommended actually earlier that we should have those foreign entities who have exposure to the physical market, they should be able to hedge their price risk in our exchanges. But allowing FIIs right now may not be so easy or may not be so desirable, because first you have to have some depth in the market. FIIs are purely investors, so do we really have that kind of depth in all the contracts? So that needs to be examined very closely before any such permission is considered.
When this merger happens, the legacy of FMC also shifts to SEBI. There are lots of cases which are pending, which FMC is fighting, including the last one, the NACL cases, which are in multiple jurisdictions and multiple courts. What happens to those?
As per the Finance Act, which is now leading to the merger, wherever FMC was there, those parties can agitate the matter against SEBI. So then SEBI kind of substitutes FMC in those cases.
The whole concept of this merger will also make the commodities market or commodity exchanges as deemed stock exchanges, which basically means in the near future, if they want, they can enter into the stock markets. The same holds for the stock exchanges as well, where the merger allows them to enter into commodities market, or at least gives them the venue to enter the commodities market. Do you think this is a possibility in the near future, and should SEBI wait for a certain time before it allows the established stock exchanges to enter into commodities market?
As you said, once the commodity exchanges become deemed stock exchanges from 28th of this month, technically this will become a part of the securities. So technically all exchanges can trade in the securities under SEBI's regulation, provided they get approval of SEBI. Now when that should be allowed and to whom that should be allowed is not something that we have examined or gone deeper into, but that is a call that SEBI has to take whenever the matter comes up before them.
But do you foresee consolidation happening, since now commodities exchanges and stock exchanges are under same regulator, some kind of consolidation happening there?
Actually, I'm not aware if there are exchanges anywhere in the world which offer both equity, currency and commodity products. Normally commodity exchanges are different and separate. As a matter of fact, many exchanges specialize in a few commodities alone. Not every exchange offers even all commodity derivatives also.
But you don't have regulators also which handle both commodities and stock markets as well, right?
So, for example, in USA, CFTC, they regulates all derivatives, irrespective of the underlying. But historically, that is how it has evolved. How it will happen in India in this new scenario is something that we all have to wait and see.
Post the 29th, when the merger happens and FMC and FCRA get dissolved, where will Ramesh ABHISHEK be?
I think we have to wait for the government decision regarding where I go, and I'll take a call on other issues as time comes up.
Mr. ABHISHEK, thank you very much for joining us.
Thank you.